We are back dissecting the government numbers with regards to debt, GDP, and diaspora remittances. What we are trying to understand today, the GDP numbers that we see and the contribution by the different sectors, how valid are these numbers? The sense that we get is the government is actually driving GDP growth rate as opposed to the private sector. Is this a valid statement or not? And this is very important because the GDP number is the basis for the majority of the ratios that we all track. Key in point would be the debt to GDP ratio at 58%. We are trying to understand, is 58% a real number? Is it understated? Is it overstated? Should you be concerned? Abraham KAMAU is the CEO of MIRADI Capital. He's an economist and he's helping us with this conversation. Welcome to the show, Abraham.
Thank you.
Just before we took a break, we were discussing the drop in diaspora remittances on a month-on-month basis.
Yes.
What is your thinking? Is this seasonal? Is this one-off? Should we be concerned? And what metric does this actually affect when we're looking at the national numbers of Kenya?
I think since you're comparing June to July,
yes,
I think probably we may not be comparing like to like, because remember June was a very special month.
Yes.
It was the end of deadline for you to remit your money tax-free, no questions asked. And remember in that 1 month, we remitted 1 billion shillings a day.
Wow, 1 billion shillings a day.
Yeah, because it was 30 billion in 1 month. So probably the June was the abnormal month. Then maybe July is a normal month. So let's see how August comes.
Okay.
Then maybe if we compare July to August, maybe, but because June had a very special matrix applied to it.
Okay.
So I think comparing to July may not really be fair.
All right.
Yeah.
Maybe, so from an economic perspective, do we need maybe 6 or 10 additional data points before we start getting concerned, or what would you?
Yeah, you see with trends, the bigger the data set, the better.
Okay.
Because now we're just comparing 2 months, and those months are not like.
Okay.
Yeah, so I think maybe let's watch the trend more. But on a cumulative basis, I think we've already remitted more money than we did the whole of last year.
The whole of, certainly.
Yeah, so that's a big statistic.
Okay.
But now we're looking on month, let's see how August behaves.
And then
whichever way we are going to...
We can see how it's good. So then how does this tie to currency? Because we are always hearing that we have more than enough usable reserves. We have 5.76 months import cover.
Yes.
And this is also heavily supported by diaspora remittances. In other words, we say that the central bank has more than sufficient ammunition to be able to defend the currency if they had to.
Yes.
And that actually now negates the conversation that says the currency is actually overvalued. How then do we look at the correlation between diaspora remittances and currency? And also, just to put in an additional parameter, how do we also look at that relationship with regards to demonetization and the increased volatility?
You see, central bank is a custodian of the monetary policy.
Yes, it is.
Number one. And to do that, it has to have ammunition, as you rightly put it. Now, in terms of stabilizing the forex rate, they determine what works for a country.
All right.
And for us now, it looks like that number is between 100 and 1 to 104. 100 to 104.
1 to 104. Okay.
So they have, and remember the other day when it went to 105, they actually got into the market and brought it down.
That's very true.
Yeah, so because they can. And you know, because you know you're walking a very tight rope between the exporter and the importer.
Yes, we are.
Because if you push it too high up, then the importer suffers.
Okay, fantastic.
If you push it too much down, the exporter suffers.
Okay, so let's look at maybe 4 to 10 additional data sets when we're looking at the diaspora remittances. But I like that you've said 104 is probably the psychological point.
It looks like they're happy with that, because when it stays there, they don't come to the market.
Okay, fantastic. Fair enough. We're happy with that. Abraham, the conversation with regards to GDP numbers that are coming out, there's an element that the numbers are portraying a very good picture. When you look at Kenya on paper, we look fantastic.
Yes.
However, when you go to the ground, it's a very different story. We're trying to understand this GDP numbers, and our graphics team can put up for us the growth rates as at the first quarter. That is graph number 1. So we have the growth rates there, and the last reported growth rate was 5.6%. Help us understand, how do we reconcile the GDP growth rate and really what's happening in the ground, and for you as an economist, really?
You see, actually the distinction comes between the two issues. GDP, growth in GDP,
okay,
and the permeation of that GDP to the ground. Now, growth in GDP is economic growth. That's what we are measuring, year-on-year growth of GDP. That's economic growth.
Okay.
Then we have economic development.
Yes.
To what extent does that growth benefit the normal person?
How do we capture economic development?
Yes. Now, that's what I'm getting to. Now, you see, it's about participation.
Okay.
So why we're having the problem we're having is because it means this growth is there, but it is brought there by much fewer players. So what does that mean? So if we even have $100 million, maybe only 100 people have participated in putting that up.
Okay.
And the rest of us have not participated. So whereas we hear those numbers, we don't feel them.
We don't feel them.
So how you go around that is that you have to bring in more people to participate. But that only comes if the per capita income is growing.
And what would drive this? Because I can understand when you say that we probably need more people to be engaged in economic development, which really means productive economic activity. But from where I sit, I look at the numbers that are coming through the capital markets, so Safaricom and your banks as well as manufacturing sector, and they're not palatable. So there is a slight improvement certainly this year over the last 2 to 3 years. But if the banks are reporting 5% growth over the last 12 months, I mean, what is the person out there reporting?
You see, people, whenever you're investing after you're done with consumption. So actually, most of the time you'll invest what is excess of your consumption out of your disposable income. Okay. Now, that disposable income is what is shrinking because the per capita income at the ground is shrinking. So how do you grow that? We have to look at the sectors that drive this economy. And that's one of the key sectors is agriculture. When agriculture is not working, most of the people will not have money in their pockets. And that's why you see, my position has always been that let's map our economy around agriculture. Let's do our tourism around agriculture. Let's do our manufacturing around agriculture. You know, because when you do that, the value chain is very long. Okay. And you'll be felt more on the ground if you do that.
So that there's what we need to do, and that's certainly appreciated. But as an economist, I really want to just delve on the numbers. So the last reported number, 5.6% growth. Right? Yeah. And I think our graphics team can just help us decompose these numbers with regards to the contribution by the different sectors, and that is graph number 2. And certainly agriculture has the largest contribution at 26.1%. Yes. But as an economist, when you look at the data that comes out from the National Bureau of Statistics, it is the custodian of this information. Yes. What comfort do you get when you're looking at these numbers? So when we say 5.6%, what is the absolute number today? What has the absolute number been looking like? How is it evolving, and what's really driving this?
You see, and that's the problem with data collection. Whenever you're dealing with an informal economy like ours, most of that data is imputed. So there can be discussions about the methods which have been used to impute. Unfortunately, the Bureau of Standards does not divulge the methods that they use. And that's why even when you come down to even the number of what is our GDP, and what method has been used. Yes. Because there are various methods of arriving at that figure. Those things are not clear. And that's why even when you come down to calculating our debt to GDP ratio, they are varied. Because it's a matter of what is on the numerator and what is on the denominator. Okay. Yes. So in this case, if you look at the ratio, they're talking about 58%. 58% implies because the current debt is 5.8 trillion. So the debt is 5.8 trillion. So if you're using
58%,
so it means the numerator is 10 trillion. Okay. It follows. But now the question is our GDP 10 trillion? You see, that's the question.
That's the question.
And we can only answer that question if we have the same information that they have. Yes. And they put the method on because they have to show us how they computed those numbers. Okay. Otherwise, then we may just be talking about numbers. Because as you're saying, there's a disconnect between these very rosy numbers and when you actually do a dipstick and interrogate the people on the ground. Okay.
Because if I was on the central bank website today and I did download the annual GDP numbers, and I think the thing that you're bringing out is there are different data sets, and maybe there's not a central reference point where you can get the numbers. Because if you go to the National Bureau of Statistics, you'll get the quarterly numbers, and largely, actually, the first quarter GDP report says 5.6% growth, and it gives you the growth rates, and then it breaks down and says the contribution by the different sectors, but it's a bit challenging to actually get an absolute number. And then conversely, when you go to the central bank website and you download the annual GDP data, I think the last reported data set there was for 2017, and I could have been looking at the wrong numbers. But then we've had anything between 8 billion to 8.7, 8 trillion to 8.7 trillion. Yes. Effectively meaning that we're about 80 to 90 billion dollar economy. Yes. So where should we actually get this information from? And what should we be looking at? Because if you say GDP to debt, That's a key ratio that we keep looking out at, and we keep saying it's worrying. But if the base is wrong or we are not getting comfort in the base, how do we actually validate this base reference point that we're using?
You see, even the way we collect our data, I think has to change.
Yes.
Because even look at the personal data, and what the government has to go through, like has to take us through a Huduma number to try and consolidate the data into one portal.
Okay.
I think we have the same challenge. Central Bank have their own data, CBS have their own data.
Actually, Central Bank references the National Bureau of Statistics.
Yeah, the Ministry of Trade have their own data.
Okay.
And those data they're not exactly the same. So I think we need a central depository, which should be the Central Bureau of Statistics. But now, if they're receiving conflicting information, which one do they rely on? But you see, at the end of the day, they have to give us something.
Okay.
But now that goes to the confidence of those numbers. Are
you confident in the numbers that you use?
But personally, and I would want to see the methodology.
Okay.
Yeah, it's only then would I tell you, because part of those numbers are imputed, given the economy, because our economy is not fully numerized, for lack of a better word. So part of it is actually informal. So somebody has to say, in this economy, 20% is missing. So I'm going to add a 20% factor.
So is there an overstatement?
But the question is, why have you used that factor? Okay.
Yes. So this number that we are seeing, which between 8 to 8.79 trillion shillings that we are seeing with regards to the productivity of Kenya as a country, is it overstated? Is it understated?
You see, even if you look at the way we are doing things, like let's take infrastructure for example. We were doing a lot of roads and bridges, but the people who are doing it are mostly foreigners.
So value is actually leaving the country.
Yeah, so we have physical infrastructure if you go by the product method, but if you go by the expenditure method, the money is not here. Okay. You see, so those are the kind of disconnects I'm talking about.
So then there's need to understand.
Yes, to understand exactly and understand this transaction.
Okay.
Yeah, so that maybe some of these methods may not be applied as is.
But if I want you to tell me, you're an economist and you evaluate this data each and every single day, and I can understand the nuances. But do you feel that this number reflects what's happening on the ground? Should I be comfortable when I say...
You see, from an economic growth perspective, it most likely is true.
Okay.
But it is, you see, people don't feel economic growth.
People feel economic development.
You see,
so then we need to move our rate to economic...
And you see, you can even have economic development without economic growth.
Okay.
Because you just need to share the pie a bit better. That's all you need to do.
Okay.
But you can be growing it, and lesser and lesser people are contributing to it.
All right,
so people on the ground are getting worse off.
Fair enough.
Yes.
All right, let's just go back to the contribution with regards to graph number 2, what we are seeing from the different sectors. So agriculture and forestry, that was 26.3% in 2019 with regards to contribution to the GDP. And I want to imagine that you're saying the bulk of this is actually informal, so it's not very clear where the benefit is actually coming from.
Yeah, because see, when you say agriculture, you see, the one thing it does not talk about is whether this is primary, this is agro. Okay. You see, those details are very important here, because you know agriculture is a very big number.
Yes, it is.
Yeah, so you'd have to dissect this now, because for me, the more value you create within that agriculture,
so it's important. Okay.
Yes, the more people you're able to bring in.
But this is the interesting part that I always look at, and I always keep going back and forth on. Information and communication is about 4.2%, and there's always a conversation that possibly information and communication is not fully captured in terms of its contribution to GDP, because looking at the element with regards to growth, it was 10.5% growth that was reported, fastest growing sector with regards to GDP. Do you feel like there's an understatement or an understatement of the ICT sector to GDP growth in this economy?
I think it is, but then again, remember, so most of the activities happening in the ICT sector are happening on platforms that are not domiciled here.
Okay.
So, and remember, even there's a conversation of how do we tax
this
kind of portals? How do we tax activity on Facebook, activity on Google? So, whereas...
Do you want that activity to be taxed?
I think any income should be taxed.
Yes.
Yes.
I
believe. Yes. I believe that if there are no free lunches, if you're consuming public goods, you need to pay for them.
You need to pay for them.
Yeah, but for this, I think that the difference comes from that reality, that whereas there's a lot of activity happening within the ICT sector, most of it is not happening on platforms that we can locally capture here. So even that data is not even here. It's with Facebook, with Google, and other people, other platforms. So it is. So that's why when somebody global is looking at Kenya,
yes,
we are growing.
So
immensely.
we're growing. Okay.
Yes.
So I think the conclusion of this, just before we take a quick break, is the number is valid, but we just want to understand the methodology to be able to give comfort, because it's a pertinent number. It's the base of any ratios that we calculate. Abraham, we take a short break. Look out for the closing bell on the NSC. Don't go anywhere. We'll be back with this conversation shortly.